Welcome to our session today. I'm your instructor, CPA Aringo Frederick. A continuation of what we've been doing earlier on. So in our class today, we are going to introduce another phase of CVP, and this time around, I'll be looking at CVP analysis for multiple products. CVP analysis for multiple products is a concept that I want us to study today. So looking at CVP analysis for multiple products, my good students, what should we understand or what should we know? You normally find that a simple basic CVP analysis can be extended to handle more complex situations. And ideally, these are situations when it comes to when you're looking at it practically. So you'll find that at this point, you're going to extend the basic CVP that we noted earlier on in our last class, at least to extend it to handle situations where we do have more than one products. Ideally, that is a concept that we'll be looking at under CVP analysis for multiple products. I'll be looking at situations whereby I need to determine the break-even points where I do have multiple products. I'll not be considering only one product. So this is how we are going to handle it. First of all, as at now, we know very well that how to determine our normal break-even point. The same concept will apply here. Only that I'll be considering various products. So, looking at break-even point for multiple products, in the event that we'll be talking of break-even point for multiple products, my good students, I want us to have this in mind. We'll be talking of our fixed cost. We divide by our summation of weighted average contribution margin. Or we can determine our break-even point still for multiple products by considering our fixed cost. We divide by summation of contribution margin ratio. So these are the two situations or formulas that you can always consider at any given point whenever we are looking at CVP for multiple products. Where in this case, breaking down these variables of ours, where WACM, this stands for weighted average contribution margin. This stands for our weighted average contribution margin. Whereas CMR, this stands for contribution margin ratio. This stands for contribution margin ratio. That is our CMR. Now, the moment you do have these two situations in hand, you'll find that how will you determine these weights? Because here you are talking of the weighted average contribution margin. And here you are talking of CMR, I'm talking of the ratio. So I want to give you a shortcut. I want to give you a concept that when you have this concept, my good students, there is no way that any question for multiple products will ever bring an issue to you. So in this case, we are talking of our weights. For us to determine this weight, which I want you to have it and mark it very well, if possible, have this with a different pen. When you are talking of this case, whenever I want to determine our weighted average, or when you want to determine our ratio, we normally tend to determine these ways or ratio how. In this case, we normally tend to use the aspect of the sales demand. We normally use sales demand. And of course, this should be in quantity. We normally use sales demand and it should be in quantity. The sales demand quantities that, or we are going to use this factor to enable us to identify our weights and also to come up with what? To come up with a ratio. To come up with a ratio. And to do this, I want us to have a very simple example which is going to assist us to understand the whole concept of CVP under multiple products. Consider this example, my good students. Consider this example. Consider this example here. Consider this example. I'm given, say, like 2 products. I'm given product X and I'm given product Y. Then we do have our sales demand. We do have our sales demand. We do have our sales demand. Yeah, this is in quantities. This is in quantities. We do have our sales demand in quantities. We do have our selling price here. We do have our selling price here per unit. And we do have our variable cost here per unit. So looking at these 2 products of ours, we are given our 2 products. Considering these 2 products of ours, we have X and Y. So I'm having X and Y here. Where in this case, I'm given sales demand, assuming maybe I'm given, say, like 100,000 units. I'm given, say, like 50,000 units. These are our sales demand. Selling price, you can take any figure. Maybe I'm given here, say, like, maybe I'm given, say, 20 and I'm given 30. Variable cost, probably I'm given a figure of, maybe you can take any figure, maybe 15. And talk of, I'm given, say, like, assuming 20 variable cost per unit. Then here, my good student, you're also given fixed costs. Fixed costs, I'm told that we have a fixed cost of, say, like 500,000 shillings. Fixed cost, I'm given 500,000 shillings. You're given a fixed cost of 500,000 shillings. Then required, I'm required to determine, to compute break-even point, compute break-even point, compute break-even point for the combined products, in quantity and value. In quantity and value. In quantity and value. In quantity and value. So at this point, I'm requested to compute our break-even point for the combined products, both in quantity and in value. In quantity and in value. So that's the situation that I'm given. Where are we going to start from? Where are we going to start from, my good students? Where are we going to start from? That will be very simple, because that will be very simple, my good student. This will be very simple because this is what you are going to do. This is what you are going to do. We are going, first of all, to determine our weights. We are going to determine our weights because we know very well that for us to determine our break-even point, I should be talking of fixed cost. We divide it by our weighted average contribution margin. So first thing first is upon us to determine our weights. It's upon us to determine our weights. It's upon us to determine our weights. So I want us to determine our weights. That's the first thing that we're going to do. To determine our weights. And how will you determine our weights? So to determine our weights here, we've said one main element will assist us to determine our weight. And this is, we've said we are going to use the sales demand or quantity. So I'm going to use our sales demand to determine our weight. So therefore, this is what we should be having. This is what we should be having. I'm going to consider our weights. So this is what we're going to have, my good students. I'm going to take, for X, we know very well, X and Y. So X, we do have 100,000. Whereas Y, I'm having 50,000. This should give us 150,000, correct? Having that, can you now determine the weight? Can you now determine the weight? We can determine the weight, of course, by taking 100, we divide by 150, whereas this other case we should be taking of 50, we divide by 150. That should give us our weight. That should give us our weight, of which in that case we will be having a figure of how much? Take 100, we divide by 150. 100 divided by 150. So therefore we should be talking of 100, we divide by 150 to give us 0.7, right? To give us 0.7. Meaning that, of course, if I'm having 0.7 here, this one should give us 0.3. That is in the event that we've used what? That is in the event that we have used our weights. That's in the event that we've used our weights. Suppose I was to consider our ratio. Suppose I was to consider our ratio. If I was to talk of our ratios, the same concept will apply, my good students. You are going to use what? Our sales demand in quantity. So, using our ratio, as if we'll be talking of 100,000 is to 50,000. So, this is as if you're talking of a ratio of 2 is to 1. We are talking of ratio 2 is to 1. So, this is how we can determine both our weights and ratios whenever I'm dealing with a multiple product situation. So the moment we do have this case, the next step will be what? I know very well I need to come up with what? Weighted average contribution margin. So the next step, my good students, it will be upon us to determine our contribution margin. It will be upon us to determine our contribution margin. So how will you determine our contribution margin? To determine our contribution margin, my good student, I know very well I'm dealing with two products, X and Y. To determine our contribution margin, it should be having my selling price per unit, our variable cost per unit. The difference should give us what? Our contribution margin. The difference should give us our contribution margin. So selling price per unit of our product, you can clearly see we had 20. We had 30. Variable cost, I'm having 15, and you do have 20. So this should give us 5, and this should give us 10. I'm having our contribution margin. We know very well contribution margin, I'm talking of what? Our selling price per unit minus variable cost per unit. That should give us what? Our contribution margin. And the other thing, we know very well that we've already calculated our weights, right? We have our weights here. We have our weights already. We had calculated our weights, weighted average. Weight for A, we had 0.7. Weight for B, we had 0.3. I think determining weighted average contribution margin now will be very simple for us. So determining our weighted average contribution margin. What are we going to consider, my good students? What are we going to consider? I'm going to take our contribution margin, we multiply by our weighted average. That should give us our weighted average contribution margin. So this is what we are going to do. I'm going to take our 5, we multiply by 0.7, right? So that should give us 3.5. So I'm having 3.5 here. 10 by 0.3. So I'm going to take our 10. We are going to take our 10 by 0.3. That should give us, my good student, how much? I'm having a figure of 3. So summation, we can clearly see I'm having summation of weighted average contribution margin to be how much? To be 6.5. So 6.5, this should be our summation of weighted average contribution margin. And we know very well, for us to determine our break-even point for multiple products, I'm going to take our fixed cost, we divide by weighted average contribution margin. As simple as that, right? So, come and determine our break-even point. This is for the multiple products. So, in this case, of course, I'm going to determine this in quantity. In that case, I know very well I'd be having our fixed cost. We had how much? 500,000. So I'm going to take our 500,000. We divide by 6.5, summation of weighted average contribution margin. So that as at the end of the day, my good student, that should give us how many units, Germany? We should be talking of 500,000. We divide by 6.5 to give us a figure, of 76,923. I'm having 76,923 units. 923 units. So in that case, I've determined our break-even point in quantity. That is for the combined products, for the multiple products. And ideal, this is a real situation that normally happens in the field, whereby you'll find that a business is not only dealing with one product, it's dealing with multiple products. So to have that case, you'll find that will make it to be very simple, because having this case, we have determined our break-even point in quantities for the combined products. So that is what we need to have. What if in the event that hours are required to determine our break-even point in value for the combined products? What will we do? For us to determine our break-even point in value, my good students, I'm going to give you a shortcut which will assist you to understand this concept clearly. To determine our break-even point in value, I'll also be required to come up with weighted average for our selling price per unit. So I'll have to calculate our weighted average of our selling price. And weighted average for our selling price, you know very well I'm having X and we do have Y, correct? Selling price of X, you know very well we had 20. For Y, we had 30. We multiply by our weights. Weights for X, 0.7. Weights for Y, 0.3. So that should give us how much? This should give us, for like the first case, we should be talking of 20 by 0.7. That should give me a figure for much? 14, right? That should give us 14. Whereas 30 by 0.3, that should give us a figure of 9. Sum them together because you're talking about the summation. So talk of 9 plus 14, of course that should give us how much? 23. So that is a weighted average for selling price per unit. So confidently, I'm going to take our break-even point in quantity. 76,923. We multiply by 23. As simple as that, we multiply by 23, which in that case, you can clearly see we should be having a figure of 76,923. We multiply by 23 to give me a figure of how much? 1,769,229. 229. And that is our break-even point in value. And that is how you are required to determine this component. That is how you are required to determine the aspect of CVP, both in value and in quantity. A good question would be, what if in the event I was required to determine break-even point for each product? If I was required to determine a break-even point for each product, what would we have done? Suppose I was required to determine a break-even point for each product. Again, you'll see this will be very simple, my good students. This will be very, very simple because I'm going to take this. I'm going to take our X and you do have our Y, right? Combined break-even point, you've clearly seen we had how many units? 76,923. 76,923. That is for the combined products, right? That is for the combined products. Come and take your weight. Out of the 76,923, what is the weight of? What will be the proportion of product X? I come and take our weight here, 0.7. For Y, take 0.3. confidently at this point, this should give us in what? This should give us a break-even point in quantity for each product. So therefore, we should be having 76,923 by 0.7. The first case, I can clearly see we do have 53,923. 53,846. 846. What about for Y? For Y, I'm having 76,923 by 0.3 to give us a figure of how much? 23,077. So that as at the end of the day, if we add these two, if we add the two, clearly, you can clearly see it will take us back to a figure of how much? 76,923 units. So this is in quantity. This is in quantity. What about in value, my good students? In value, what we are going to do, I'm going to incorporate what? Our selling price per unit. We are going to incorporate our selling price per unit, which in this case, the first one I'm having 20, the other one I'm having 30. So in value, what will you be having? In value, what will you be having? I should be talking of 53,846, we multiply by 20 to give me a figure of how much? 1,076,920. Whereas the other one, you should be talking of 23,077, we multiply by 30 to give me a figure of 692,310. So that as at the end of the day, in total, you should be talking of 692,310. We add 1076, 920 to give me a figure of how much? 1,769,229, 229, which is the same as just 30. So 230. So this is how we are supposed to do. You've seen, we've just arrived at the same figures, right? So in this event where I was required to determine where I was required to determine for each product, both in quantity and in value. If you are just required to determine for the combined, this is how you're supposed to do it. So in this case, if we've realized we've used what? We've used our weights. We have used our weights. So I want us to consider the point whereby maybe I'm required to use our ratio, or we want to use our ratio. Because for exam purposes, my good student, recall that the examiner won't be specific on the item that he wants you to use. So you can use the one that you are feeling very comfortable with. You can either use the ratios or you can use what? Our weights. So the first case, we've dealt using our weights. I want us now to consider our ratios and see how the same concept will flow. So if you're watching this video probably on YouTube, we have all the videos for management accounting in our phone application. So just go to Play Store, search Mdarasa. Download that phone application, my good students, and let us engage there very well. We have very good videos which will assist you in your course. That is, if you're doing management accounting, whichever level, if you're doing CPA, if you're doing ACCA, if you're doing NEC exams, this concept is just the same. So I want us to consider our ratios. Allow me to erase here, allow me to erase at this point. So the first case, we've talked of our weights. What about in the event that I was using our CMR formula? I want us now to use our CMR formula. So what I'm going to do, we're going to have our ratio. And ratio, you can clearly see, we've already seen our ratio 2:1. Our ratio 2:1. Our ratio 2:1. So clearly you can see my CMR here, talk of our CMR. For product X, we are going to talk of 10. That is 5/2. For product Y, I should be talking of 10/1. That should give us 10. So our CMR, we're going to have what? We're going to have 20. That is summation. Determining our break-even point. We know very well that I'll be talking of our fixed cost, which is 500,000. We are going to divide by 20. So that in that case, that should give us a figure of how much, my good student. We're going to talk of 500,000 divided by 20 to give me a figure of 25,000, right? To give us a figure of 25,000. Now, I want to determine in total. Therefore, in quantity, I'm having X and you do have our Y. We have 25,000, we have 25,000. The question is, what was our ratio? Ratio for X, we had 2. For Y, we had 1. So therefore, at this point, I can clearly see I'm having 50,000. Whereas in this case, I can clearly see we do have 25,000. So total, we are going to talk of 75,000 units, being our break-even point. So ideally, I've already computed for both products and also for total. So this is in quantity. What about in value? The same concept, I'm going to integrate our selling price per unit by 20 and by 30. By 20 and 30, selling price per unit. So therefore, on this case, we should be talking of 50,000 by 20 to give me a figure of 1 million. 1 million. The other case, we should be talking of 25,000 by 30 to give me a figure of 750,000. So total, we can clearly see our break-even point in value, 1,750,000. And we have it like that. So these questions are very simple. So long as you've opened your mind wide, you'll find that these concepts, ideally, my good students, they are very, very simple for us to understand the concept clearly. So this is what we should be having. So therefore, we've clearly seen how we can determine our break-even point under multiple products. That is, if I'm given 2, 3, 4, 5, as many products as we are given, we can always determine our break-even point, both in value and in quantity, using the same concept. And that's the beauty of us grasping these concepts correctly. So in our next class, my good students, I want us to consider an illustration question. This illustration question is going to come from our past papers. It's going to open our mind wide and understand clearly the concept of break-even point for multiple products. Because we are going to go a step further and also look at what? Look at break-even chart for multiple products. So to this juncture, thank you so much, and I want you to join me in the next session. Whereby we're going to consider this illustration question, which will assist to open our mind wide. So thank you, and let us meet in the next session.